just as a brief introduction, my name is Litonjua, and I currently lead Vacuumlabs cryptocurrency sales initiatives. So we're a software engineering company focused on delivering and deploying fintech products and specialized primarily in digital banking, but have recently entered the crypto space. So I focus on really helping corporates integrate blockchain technology into their products and also DeFi native apps write and audit their smart contracts. But you came here to learn a bit more about blockchain. So moving into the talk, let's first get a little bit of a primer on what exactly it is. Blockchain is a decentralized digital ledger that records transactions across a network of computers. Each block in the chain contains a number of transactions. And every time a new transaction is added to a block, it is added to the chain, creating a record that cannot be altered. For me, the easiest way to think about this is a Google Sheet that everyone has access to. In this Google Sheet, we can collectively decide the contents of each cell, but can't ever remove the content. And the specific hash of this content is based on the previous cell's content. So this is the key feature of blockchain technology that makes it useful for cryptocurrency, and that allows it to be secure, transparent, and tamper-proof. So you can think of each entry as a transaction from one person to another. The content of each cell is hashed. You can think of a hash as a sort of digital fingerprint, and the next hash is calculated using the previous hash. And this really prevents the blockchain from being tampered with, because if, for example, you have a previously written cell's content and the content is adjusted, the hashes of the subsequent blocks change, meaning you can't really edit it. And this is all kind of publicly viewable. Cryptocurrency itself is a form of digital virtual currency that uses cryptography for security and can operate independently of a central bank. The key distinction here is that these currency supplies are dictated by computer code rather than a central bank. For example, Bitcoin has a hard cap on its supply, as there can only be 21 billion coins in existence. And it's currently being issued at 6.25 Bitcoin per block, but that halves every 4 years. And no one can really adjust or change this. And this is quite attractive, because if you think about it, sometimes when inflation occurs, it's because of overprinting of money. So now you have this printing of money that is really governed by code, right? Talking more about Bitcoin, it was the first decentralized cryptocurrency and is still the most widely used. Others include Ethereum, Litecoin, and Ripple. And these cryptocurrency transactions are recorded on their own blockchains, which allows for the peer-to-peer transfer of these digital assets without a central intermediary like a bank. The attractive thing about cryptocurrencies is that each one of them can be designed to have a unique supply, emission, and burn schedule. So for example, rather than having a fixed hard cap like 21 million, Ethereum has a maximum yearly supply of 18 million Ether that's burned each year, but that generated each year, but also has this burning mechanism where whenever the network is used, a portion of Ethereum gets burned, right? This means that the more the network is used, the slower the rate of inflation, and theoretically, the higher the projected future price. So you can see you can do all of these kinds of economic experiments with crypto, and that's what makes it so attractive. And that's why the DeFi ecosystem has flourished so much. Moving on more into a smart contract. A smart contract is a self-executing contract with the terms of agreement between the buyer and seller being directly written into the code. The code and the agreements therein are stored and replicated on the blockchain network. Smart contracts allow for this automation of many contract processes, including the enforcement, negotiation, and performance of a contract. So a good example of this is an escrow exchange. In the olden days, if I wanted to purchase an item from someone, but could not do it instantly, I would usually give the money to a trusted third party who would hold my money and wait until the counterparty gave the item. They would then exchange the money and the item and usually take a small fee. This trusted third party is usually a bank. But with smart contracts, this can instead be a piece of computer code. This vastly increases the efficiency and decreases the cost of an escrow. And these smart contracts are really the primitive building blocks of decentralized finance. And you can think of them as open APIs, but on steroids. Because most of the smart contract code is open source, it is easy to build upon them. So for example, I'm not sure how familiar you guys with the Ethereum ecosystem, but there's a protocol called Alchemix, which is a self-repaying loan. And they actually use the Aave smart contract, which allows you to earn yield on your cryptos by depositing and then earning a yield. So they don't even need to ask permission Aave permission for this, or for an API key for that matter. And this allows much faster building and rapid iteration. Because they are stored in a blockchain, they're also like transparent and secure. One caveat here is that there can still be vulnerabilities in the code, and there can still be loopholes inside the contract that can be exploited. For example, in 2016, there was this thing called the DAO hack, where almost 1/3 of Ether was drained, right? And there was a bug in the smart contract wallet that basically allowed someone to drain like all these funds. He made a small contribution, and using a recursive function, essentially drew, at that point in time, $70 million worth of money, causing the price of Ether to drop from 20 to 13. And what happened at that point in time was you actually had Ethereum Classic being created, because there was a dispute between like, should we roll back the blockchain or should we not? And this kind of brings me to the concept of social consensus, right? Like, and that causes like the fork of like the community. So it's quite interesting. But moving on to like exploring the case of like why it could be the future of finance. Institutional adoption is on the rise. Visa released a proposal that would allow owners to set up automated payments directly from their smart contracts, from their own self-custodial wallets, without requiring intermediaries. So usually this is something that is typically quite easy to solve, but Visa is actually preparing for a world where users may want more self-custody of their funds. And they're developing these more flexible user accounts using Ethereum's feature called account abstraction. And this allows smart contracts to be programmed on a per account basis, rather than like on a generic basis. This idea of self-custody is central in crypto, and a real paradigm shift, as most of our money like right now is kept in banks rather than a suitcase under a bed, for example. But it's interesting to see how Visa is preparing for this kind of future. But in a way, it's almost justifiable. I don't know if you guys have read the news, but back in early 2022, Canada froze the bank accounts of hundreds of people who were associated with the trucking protest. So these protests were sparked by a mandate that essentially required Canadian cross-border truckers to be vaccinated against COVID-19. The interesting thing is that this shows your money may not actually be as secure as you think, even though it's in a bank. Because if the Canadian government has the power to like freeze it, like what authority do you really have over that? So having self-custody of your assets would prevent this. Moving on to the DeFi and metaverse, JP Morgan announced the opening of this lounge in Decentralised. So I don't know if you guys have played video games. I'm a big video game player, but it's a platform where users can purchase virtual plots of land with cryptocurrency, and different companies can bid for these plots of land and advertise. JP Morgan is even anticipating over $1 trillion in yearly revenues from the metaverse, and have done a number of initiatives in the blockchain space. They started the first blockchain unit back in 2020. In 2021, they became the first major US bank in July to offer wealth management clients access to cryptocurrency funds. A month after that, JP Morgan began offering its private bank wealth management clients access to a Bitcoin fund in partnership with New York Digital Investment Group. And they also started JPM Coin. One interesting thing is they also recently executed their first cross-border trade on a public blockchain. This is very interesting because one of the primary use cases of cryptocurrency is actually in cross-border payments. Instead of, well, if I want to send money to someone in another country, I usually have to use the SWIFT network. And the way that SWIFT works is that it routes money across multiple nodes. So sometimes your money has to touch 4 or 5 entities before it reaches the end person. Whereas with cryptocurrency, it's peer-to-peer. So if I wanted to pay you directly, I could just give me your address and I can send you the money directly. Goldman Sachs, they're also interested in the space. They released Dataonomy, which classifies coins and tokens based on how they're used and aims to provide a more standardized way for clients to analyze the broader cryptocurrency industry. So just watching like the time, smart contract applications, they really automate key processes. So one of like the key things here is market making. Uniswap, I'm not sure if you guys know about it, but they innovate on the existing order book model using an AMM, which is an automated market maker. This means that buyers and sellers do not really need to be matched up. Instead, you trade against a liquidity pool. So we spoke earlier about the example of an escrow. A market maker is similar in this way because it finds and matches a buyer and seller of a specified currency at a specified price. And usually there's some sort of central entity which does this. Uniswap's primary innovation is really in these liquidity pools, where instead of there being a central intermediary who books all the trading profits, instead, pools can be permissionlessly created by a user who wants to facilitate trading of these two assets. So even if you had the most obscure cryptocurrencies, you could always put it up for trading and you didn't need permission from the exchange to set it up. If you held the largest stake in the pool, you'd be compensated the most. Although if this happened, more liquidity providers would come in. The specifics of how the pool operates is beyond the scope of this talk, but the key thing is that it really democratizes access of the trading fees and provides it to the general public and doesn't put it just for the centralized intermediaries. Moving on to the application of real estate, Figure reduces the time to get a home equity line in the US from 9 days to just minutes with the blockchain. And they use the blockchain to record, share, and exchange data about your loan. Without the blockchain, all of this has to be done manually. You have to find mistakes, you have to correct them, but blockchain ensures that your loan is recorded and stored accurately for more efficient processes. So this is one of the key use cases, which I think will be very big in the coming years, is actually putting land titles on the blockchain and using it as a basis of truth. This is essentially really important in third world countries where oftentimes you don't know who actually owns the land certificate, this piece of land. Everything's in paper. But these paper documents can be forged, right? So blockchain can solve this by ensuring only the signatory of the land title has the correct private key to prove the validity of a specific real estate transaction. So this is one of the applications which will potentially happen in the future, but no government is currently doing this. But I've been hearing that this is something really interesting for people. Moving more into zero-knowledge proofs, which offer the best of efficiency and privacy. Zero-knowledge proofs are interesting because they enable someone to prove they know something without knowing what that something is. So one of the best examples is a Where's Wally zero-knowledge proof. Where's Wally, you have this image, and then you have lots of people and Wally in the middle, or not in the middle, but somewhere there. And you let's say I wanted to prove to you that I know where Wally is, but I can't show you the location. So what I do is I get a big piece of cardboard, maybe 5 or 6 times the piece of paper, take a small cutout of Wally, and just superimpose it over the sheet. You would know that I know where Wally is, but you wouldn't know the exact location of Wally. So why is this interesting? For example, ING, they created this range solution where they allow users to prove that they have a secret number that lies within a known range. For example, a mortgage applicant could prove that his salary sits within a certain range, meaning he's approved for a mortgage, without necessarily disclosing the exact specifics. So this is actually particularly useful in today's era where privacy is paramount. We don't want Facebook having ownership of our data, all these kinds of things. But imagine a future where we no longer have to provide all our personal details, but instead can selectively disclose what information we want to reveal. This could create a whole new class of applications that allow users to really own and control their own data. So we could have, for example, a future where we have transaction histories across multiple blockchain addresses, and we can use some of this off-chain identity and link it to these wallets. To get a mortgage approval, all we need to do is connect the wallet, and it can query our transactions on the blockchain. This is quite cool. Moving more now onto the privacy-preserving protocols of Zcash. This is a cryptocurrency that offers privacy and selective transparency of transactions. It was developed in late 2016 and features 2 kinds of transactions, transparent and shielded. It's important to note that even though crypto protocols themselves may be private, off-ramps and exchanges usually involve some form of KYC, know your customer, which means that if someone is looking to transfer crypto to fiat, they usually have to go by an exchange and hence disclose their identity. This is why in a number of crypto hacks, it is very difficult for the attacker to actually realize the cash return because exchanges blacklist these addresses. One way a hacker could avoid this, is via a coin mixer such as Tornado Cash. And this is where we get into some of the negatives of crypto and what it can enable. Tornado Cash essentially allows you to works by allowing you to deposit money into this smart contract, and it gives you a specific private key. This private key can then be used to withdraw the crypto into any other wallet address. So it's recently been sanctioned by the US government, and the developer was even put in jail for this. And it's reported that Tornado Cash has like moved over 7 billion worth of currency since 2019. Right? So this is actually a good segue into why crypto could be a misguided fantasy. Talking about ICOs, ICOs are known as initial coin offerings. They're very similar to IPOs, and they're a form of fundraising for blockchain projects, where cryptocurrency tokens are sold to investors in exchange for established cryptocurrencies like Ethereum. These tokens are usually a means of payment within the platform or ecosystem, and oftentimes they're considered high-risk investment. For Ethereum, it was actually a great ICO. 59.1 million ethers for roughly $0.31 at an 18.3 million USD. Ethereum itself was a pioneer of these smart contracts and allowed developers to write general arbitrary programming applications on top of its virtual machine. And this could be considered successful because a successful ICO, because now the ETH market cap, even amidst multiple bear market, is in the billions of like dollars, hundreds of billions. But you also have this narrative of Ethereum killers, which seem to pop up at every cycle. These blockchains are reportedly faster and more efficient, but also do much greater mark-to-market losses when the bear market hits. There are also a number of coins which completely don't deliver on like what they promise. So one example is BitConnect, which guaranteed a 40% return on capital, monthly capital to those who invested. And they stated that the more money you put down, the bigger and faster you could compound your profits. And if it sounds too good to be true, it probably is. And this is exactly like what you have to watch out for, because you have stuff like Ethereum, which is great, but then you also have stuff like BitConnect. So, sometimes you have to be burned in order to learn. Yeah. And this kind of leads me into like yield farming, right? As a new passive income stream. Investors deposit their cryptocurrency into a platform that utilizes it to earn interest rewards through putting it into like an automated market maker. The really interesting case study here is Olympus DAO. And they basically created a decentralized reserve currency with a bonding and staking mechanism to stabilize the protocol. So how Olympus DAO works is you have Bitcoin, Ethereum, and for example, USDT. You put it in a vault, and they built a token on top of it called OHM, which inflates based on the premium it has over the total assets. For example, if the total market cap of OHM is 900 million, and the total vault size is 700 million, basically OHM would inflate and emit tokens at a specific rate such that the market cap would like converge. And this basically what it said is like you could earn like 1% per day like by just holding your OHM tokens, right? And your OHM should theoretically be backed by Ethereum, Bitcoin, and USD. And this was like a very attractive model. And it worked for some time until eventually it didn't, because the demand, there just wasn't enough demand. And we saw it like, I invested in this and like good thing it wasn't a lot, but it reached 1,320 and now it's $10, right? So it sounds like such a nice idea, but then what happened to it? Also KlimaDAO, which basically iterated on Olympus DAO's model, but essentially provided access to like carbon credit and carbon trading markets. So one of the issues with like carbon credits and trading is that it's very difficult for retailers to access, retail people to access this. It's like, we've all heard about, net zero by 2050, all this kind of stuff, like I think carbon credits will be like a big thing. So what they did was they brought these carbon credits and brought them on chain, and then used that basically within their treasury. And then they had the Klima token that floated above them. It sounds like a really interesting model, because theoretically carbon credits should go up in value as more people, as the government mandates companies to like be more carbon neutral. But the problem here was that when they onboarded the carbon credits, it was already 90% through its life cycle. So they would onboard old carbon credits, not new projects. And this meant that like the value was actually not there. And I invested a bit as well. And the token collapsed from 3,000 to nearly 1.7. But you learn from your losses, And then the last one is like virtual gaming economies. And like, how does gaming relate to this? Axie Infinity was like one of the largest like games back in 2021. And we all like heard of these things about like the metaverse. And this game even though like it eventually collapsed, it actually showed me the potential of crypto to transform lives. With Axie, it's slightly more complicated than Olympus and Klima with like the whole auto compounding model. But essentially, you had these like NFTs, which were like little Pokemon, right? And then when you fought with these Pokemon, it would generate SLP, which is their utility token. Then you could use this SLP to essentially breed more Axies. And you would like try to recruit players to fight with these Pokemon and then earn more SLP. So in a way, like it was a self-generating cycle. And this like scholarship model, it basically matched assets with players, and provided, and one of like the big companies here, YGG, actually does this model. But the bad thing is, unfortunately, demand couldn't ultimately keep up with the supply. And that's when SLP crashed. And it's really interesting because actually with SLP, back in mid-2021, you could make a down payment on a car and an apartment in the Philippines with SLP. And you could even buy ice cream with SLP. It was crazy, right? But then it kind of showed me that like, wow, like this is like actually becoming like a real thing, right? And luckily, like with this investment, I was able to recoup the losses that I made in Olympus and Klima, right? But eventually it crashed as well, right? So what I'm saying is like no one has really figured out what the economic model is within the metaverse, like within this, right? There's still a lot of experimentation, but I think that that is what the essence of crypto is about, this experimentation. So moving on into more like the systemic risk due to like centralization. It's surprising because despite the fact crypto touts itself as being decentralized, there's a lot more contagion risk that happens. Three Arrows Capital was like one of like the largest funds. They had like over 10 billion in assets under management. And they had like a very like strong like track record around about like 10 years already, like investing. And they basically had very large leverage positions on Bitcoin and ETH. Once Bitcoin and ETH fell below certain levels, they couldn't come up with the money to meet their margin requirements, and they got completely liquidated. The other thing that's interesting is the Terra ecosystem. Terra was touted as this unique innovation because they created like an entire DeFi ecosystem, but around a stable coin called UST instead of like ETH. And this was like a more reportedly stable asset. They even had this protocol called Anchor, which promised you 20% yield on your UST, which is like a stable coin. So that's much better than like treasury rates, but if it's too good to be true, it probably is. And this is exactly like what happened, where there was an attack on the USD to USD peg, which dropped it. And they had like a backup mechanism called Luna, which essentially minted whenever like it was below peg, right? So like, because you could redeem like one Luna for like $1 worth of USD. But if the peg was like below for too long, it would lead to an overinflation supply. And that's exactly like what happened. And essentially, Luna overinflated, the market cap of Luna collapsed below that of USD, and it couldn't support the ecosystem any longer. And this is really basically the Zimbabwe hyperinflation, but like compressed into a time period of 3 or 4 days. And I saw it with my very own eyes, and I was like, wow, like, I can't believe this is happening. $40 billion gone in an instant, right? And now we've got one of, well, the second biggest exchange, FTX. I'm not sure if you guys keep up with the story. Apparently, last time I checked, like you can't see it there, but like, they recovered 5 billion in assets, and they're still trying to extract that money. But the story here is that, at least my understanding is that FTX and had this proprietary trading firm called Alameda. So FTX was created for Alameda, and they were actually reportedly commingling user funds, right? And this probably provides crypto the worst optics because Sam Bankman-Fried basically signed up movies and superstars like advertise its platform, and it gave crypto that mainstream penetration it needed, only to sour like the reputation, right? So what does this like all mean? I think there are always going to be bad actors in an industry that's fast growing, but it doesn't mean we have to be pessimistic about what the future is. Like we've seen also like that there's great technological applications. And in my last slide, I really like want to talk about what lies ahead and where like people are betting. People are seeing like metaverse as the next frontier. The big bet here is that the future of our lives will be in the digital and not the physical space. And Facebook is really betting quite heavily on this. They invested, I think, $10 billion just this year on the metaverse, and they don't have anything to show for it yet, but like they're planning on investing, I think, even like 100 billion over like the next couple of years. So they're really like thinking our lives will actually be completely digital. And for me, there's a chance that it could be true. So if you look at like some technologies like Unreal Engine 5, and you see like how detailed that world can be, I can kind of see like if you combine everything together, it can be really good. So in some sense, I understand now why Elon Musk thinks we're living in a simulation. Because if you have like something that's so photorealistic and you embed VR in that, like it's almost indistinguishable, right? So, but maybe Facebook is still a bit too early to this, you know? And there's also use cases beyond just finance. For example, one is like counterfeit goods. Louis Vuitton, they partnered with lots of other luxury brand companies to create Aura. This is like a global luxury blockchain to combat counterfeiting of goods. Essentially, like what Aura provides is it allows you to trace from provenance, from like the source to like the shelf, like where the raw materials go through. So like you can understand like I have like a real Louis Vuitton bag that is like not fake, right? So they're using blockchain for like authenticity. Moving more towards like increasing regulation, I actually think this is a good thing for crypto and severely needed because it's so easy to like scam people. Like it's so arguably easy to scam people in this industry. One of the things is with legal tender. A couple of countries such as Japan, Australia, and Switzerland are already considering using crypto as legal tender. But the most interesting thing for me is actually in CBDCs, where this is where like a lot of the attention is coming. There's 60 plus central banks studying digital currencies with 14% already entering development phase for CBDCs. China itself, they actually started researching this back in 2014, before smart contracts were even invented. And there's actually 2 CBDCs which have been launched. One is like in Cambodia, it's called Bakong, and this was launched in October 2020 to facilitate financial transactions on smartphones. And this is quite interesting because the problem with Cambodia is that you don't have traditional financial, payments and financial rails, and not a lot of people have bank accounts. So you can think of like this Bakong as like the next iteration of M-Pesa or Gcash, where you have like mobile money and mobile like payment solutions, but then the next iteration is like money on like a public or like a permission blockchain, right? And then in the Bahamas, they did something similar to with this, with this product called the Sand Dollar. The last thing I want to talk about is like NFTs actually going mainstream. Starbucks has partnered with Polygon to launch this program called Odyssey, which allows customers to purchase digital timestamps. And essentially, like you can have an interactive journey. So once you like earn these like digital timestamps, you have access to like unique experiences. And this is yet to be built out, but like it's interesting that they're looking at using NFTs for like the loyalty angle, which is something that is already done in like the standard typical like Web3 universe. I'm gonna stop here because like I want to be like here on time, but like it'd be great to have your questions because I'm not sure about your guys' background, but yeah, happy to like answer anything. Yes?
Hi, I'm the moderator, so I've got a couple of questions coming in online. I don't want to
Sure.
get in front of anybody who's already got some here though.
Yeah.
Just a question about the CBDC.
Yes.
When you were talking about Canada, when they took the money from the bank account.
Yes.
What can happen with CBDC?
I think, okay, this is an interesting point because if the government actually controls the blockchain, they can still technically freeze it. The government would have to like basically do the issuing and like allow the money to move on a public blockchain because then they don't have consensus. So if, for example, you had a CBDC, but then Canada, the government of Canada created the whole blockchain and has full access to it, it doesn't really solve that problem because you don't really have custody of those assets because they can still control like what happens there.
Yes, it's not a real decentralized.
Yes, exactly. It's more like it looks
blockchain.
Optically, yes.
Yeah.
Right, and I think this is potentially like an argument with the digital yuan because the government of China wants to like control and see like where the money is going, right?
It's even riskier.
Right, so there is still that risk. So I think you always have to be cognizant of that and see like how different governments are implementing it. But I think to my knowledge, a lot of them are still going on their own permission blockchain, not on public blockchains yet. But yeah, that's a great question.
I've got a question from E.
Yeah.
who is, what's the least risky way for retail investors to get involved with crypto?
The least risky way.
Create an exchange and sell token.
I mean, I'm not certified to like provide any like financial advice. I think, okay, I think like for me, like I would like maybe just put like 500 to like £1,000 and just think that you're gonna lose it. And like just like invest in some like random weird protocols that you think are nice, lose the money, and then you learn. It's gonna happen to everyone. It's like I think that's for me is the best way to learn. Just start with a small amount of money, invest in like 10 different things, like maybe £50, and then just watch that. And then you will learn so much more from doing that than by like reading like reports about like what to invest in. I think for me like that's
That being said, from a non-IT someone from
Yes.
a non-IT background and wants to know more like about how like blockchain, crypto,
Mhm.
like what's the resource that you would recommend?
Resource. I think like when I was learning it, like I think like the most interesting like resource was like when, to be honest, like when I like saw like Axie, I was like, oh, like this is a way of like making money. So like I kind of like learned about like the making money side part of it first, but then after like that, I got really deep into the tech.
Okay.
So maybe if you can like identify some sort of like opportunity that is relevant, like what field do you work in?
Finance,
Like fine, like
mergers and acquisitions.
okay, so
Yeah.
like imagine if you have like a project that basically tokenizes M&A and like provides access to the public. You might want to like invest like a small amount into that and like learn about that, right? And then because for me like I was also like really into gaming, so like that
Okay.
allowed me to like hook it into it and then learn.
Okay.
And then as you like invest in it, you will naturally become more interested in the technology, which is kind of what happened to me.
Okay.
So I think you have to like tailor it based on like your specific background so that you
Okay.
can just get some small amount of like exposure to it, like skin in the game. Because it's so much easier to learn when you actually have your money on the line, even if it's just a small amount. Like,
Okay. Sorry, follow-up question to that.
yeah, sure.
How many women how many people are specialized in like what you do?
To be honest, I don't think there's a lot.
Okay.
Like a lot of like the people on my team are guys, so it's
Okay,
like it
yeah.
would be great to have more like women representation in crypto. Like,
Yeah.
I just think it's really, I feel more a guy thing. Like a lot of like my guy friends talk
Is it a
about.
viable, like, after the FTX scandal, obviously the optics are not
Yeah.
looking good.
Yeah.
But do you like see the future in like, say, for example, if you were to go to give a school talk, would you say like go into crypto because that's where things are going?
I wouldn't say like, for example, like go into crypto. I'd say like be curious about it because I think crypto is so multidisciplinary that you learn
Yeah.
about many things. You learn about economics, maths, computer science by doing it. So
Okay.
like I still think you should like try to study like, for example, how the FTX thing happened. You should example like how the Terra Luna thing happened. I think they're interesting use cases, but like I just feel it's a very interesting industry as a whole, even though now like it's kind of like in a bear market, like it doesn't have a good name. I still think the underlying technology is actually so interesting and like could really provide there's so many applications that could be built on top of this. So I think it's very exciting, but like it's not, I'd say, the safest, but it's quite fun.
Okay.
So, yeah.
Thanks.
Yeah, what I would say,
Yeah.
like any other investment,
Mhm.
withdraw as when it's going up too quickly.
Mhm.
Because if you keep wait, you will be burned.
Exactly. It's like
It's like any other investment.
Exactly. I think that's how it. Yeah, she put it very well. Like, if it feels like it's too high, better sell.
Okay.
Yeah.
Hi.
Yeah. Hi.
Me?
Yeah.
I'm Marianne. I'm from PA Consulting. I
Okay.
just want to ask you, what is your personal view on cryptocurrencies and digital assets? I ask that because my personal belief is that cryptocurrencies, their value is a social construct agreed by society that their value is
Yes.
X. And when they're not backed by something tangible,
Yes.
how do you expect it to be used as a currency between people?
That's a great question, but like it also kind of, maybe this is a bit of a controversial topic, but it also illuminates maybe the flaw of our financial system. Because when like the US dollar went off the gold standard, technically what is really backing the US dollars other than collective belief, right? Like
Import, export.
import export, but like, can you like redeem the US dollar for like anything like really physical, right? So I do agree that like, I mean, crypto is based on belief, but I think so much of our economy is also like based off that sometimes it becomes difficult to like distinguish like what that is. But I'm not I guess I haven't looked at the question deeply enough to provide like a very detailed answer. But like I'd like to say that there are actually like very close parallels between the fiat system and the crypto system, in that when the US went off its gold standard, like what is really like backing it, right? Yeah.
Oil.
Yeah.
I've got, I think, a couple of more comments than questions.
Yeah.
I've got one from D. The key seems to be that the coin needs to be used. Does the hash coin used by Fligure have a natural use since it's used to run the system? Are there other industrial coins?
Hash coin used by Flickr. I'm not sure.
Fligure
If,
is spelled Flgure.
I am not sure if I know the exact coin that she's talking about, but I do agree that like there has to be some utility to the project. And actually, like the reason why so many of these crypto projects have crashed is because they have no real world utility. So when you think about it, even like Axie and Luna was its own self-contained ecosystem. So there were no like links or tethers to the real world. So actually, if you want a crypto project to succeed, maybe one thing you can look out for is like, does it have some relationship to a real world project? Like, is there some sort of like real asset that this thing depends upon, right? Yeah. Yes.
I also have a comment.
Sure.
I want to say that actually we doesn't know how many United States dollar are there. So maybe somebody is printing them in their garage.
Yes. You know, like I mean, I'm not an expert in like counterfeiting, but like that's definitely true.
And this is the real value of Bitcoin.
You
So,
would, yes,
we know
exactly, exactly.
where is it, how many there are.
Exactly. I mean, like
So,
I don't even know like if there's public information about like how much the U.S. Treasury like really prints. Like, I mean, of course they do disclose, but like you're right. Like people could produce counterfeit like dollar bills, but with Bitcoin and like a lot of these crypto projects, you can actually publicly see how much is being printed and like how much the current supply is. So it's very like publicly viewable. And I guess that makes it better because then you can like kind of control inflation. But yes, to your point, that's one of the advantages of having a crypto. Yes.
no, also, I want to add your question.
Yeah.
Rishi Sunak told that UK will become a cryptocurrency capital, at least of Europe. So I think we are early.
Okay.
Yeah.
Faster you start to
I think-
learn, the better it is for you.
Noted.
With the collapse of FTX, I think it highlighted the importance of self-custody of
Yes.
Bitcoin.
Yes.
So, do you think it's feasible to perhaps create a smart contract to tell a yield farm or an exchange, or if you're using decentralized finance, so that they know that you've got the asset, let's say a Bitcoin, and they can go and use that as they do it. So you don't have to host it on a like a centralized exchange.
I think like there's instances of that, like you have like wrapped Bitcoin and wrapped Ethereum. So basically you can bridge tokens between different blockchains. But I don't think the smart contracts have gone to that level yet where like you can basically have custody of it, but also utilize it somewhere.
Exactly.
But I think that could be the next thing. But I think the main thing here is like, how would you technically cash out? Because let's say like we all use crypto, this could work. But then if we had to like cash out like by an exchange, then and pay each other in like fiat, you know, then that the system can't really work. So it's basically like we would all have to use it in order for there to be value. But I think that could be the next iteration of smart contracts where you have complete custody of your assets, but then you can use those in a certain way. Yeah.
Because the biggest risk is putting the funds anywhere.
Yes, but there's a lot of technical complexity with that, obviously, because you could have like two different smart contracts look at a single thing and be like, okay, like you can use it and you can use it and you're using two instead of one, right? So there has to be, I don't know how to technically solve that, but you know, Yeah. Yeah.
Oh, do you see Web3 stroke DeFi becoming the mainstream of internet financing, or will that just remain an alternative to traditional web and financing?
I feel like it's really dependent on like the governments, to be honest. Like, I mean, like if you asked me before, I'd be like, yeah, definitely. Like, I think there's so many advantages to it, but I feel like the government has to give their stamp of approval in order for this to happen. And this might be in the form of CBDCs, but the government has a lot of control over like that decision. So, yeah.
Yes, it was linked even to this. First of all, I don't believe in cryptocurrencies as an investment. What the people that invest, they call the fear of missing out, already experienced 23 years ago with the dot-com bubble. Exactly the same. People were making money without even understanding. So, but on the other side, and even if you are a technical person, about the usage of blockchain, the financial service industry, and in the, as you will say, the Web3, decentralized finance, what you think, how will be used the blockchain for the financial services? Because this, I would like to better understand. The investment sooner or later we saw, all the, you listed just a part.
Yes.
The big face that
It's very difficult to like expose. I mean, like I just had 30 minutes, so I can't disclose everything. But for me, like personally, I feel the most interesting like application, and I think the nearest one isn't payments and cross-border payments, because that's where there's actually a technological advantage of crypto, right? So you don't have to go like by a SWIFT. I think 95 to 98% of transactions are done by a SWIFT, but there's so many intermediaries, and you can completely sidestep that just using crypto itself. You don't even need to do anything else. That's how it was designed. Actually, there's a company called BVNK, which is based in South Africa. I think they raised 300 million, or they're valued at 300 million, and they're doing this exact solution where they're bringing cross-border payments, but using crypto on the back end. So I can pay you like in USD in another country, but it goes via like crypto rails instead of SWIFT rails. And that's already happening. So I feel like that is probably the space to look at most closely. And then maybe in the next 5 to 10 years, if zero knowledge technology improves, like you could like see a new class of apps where like you don't even have to disclose certain information. You can selectively disclose, and you could have like new decentralized social networks where you actually own your own data. And that's for me is an exciting future, but it's a bit of a wild shot. So I look more at the payments space, because that's where like I see like a lot of activity and a lot of like interest in like developing crypto propositions, right? Yeah. Yes.
I've got another one here. I have been involved in intertrade product using blockchain between banks and in the UK and Europe. Are you aware of any other such initiatives?
Intertrade product. I am not aware of those, unfortunately. It's hard to keep up with like all the news, but yeah. But I know like certain banks have like created their own like permission like blockchains to like do like trading with each other. I know like there's some projects that are doing that, but I don't know like the full scope of their
They
details.
would be
But
private blockchain.
yes, exactly, like private blockchains.
I noticed you did not mention LIBOR or the attempt by Facebook.
Yes, yeah.
What lessons could we learn from? Because I mean, companies, some of them are really, bigger than some
Yeah.
economies in
Yeah.
this world. You mentioned that
Yes,
governments
yes,
can
yeah.
we need governments to back it. But is that attempt to have companies or organization, social organization might be
Yeah.
to back cryptocurrency doomed? I mean, what can we learn from
Yeah,
that?
I mean, like I haven't like thoroughly researched Libra enough to like provide like a detailed answer, but like kind of like my kind of gut take on it is that even like for example with the metaverse thing, it like with Facebook, the metaverse isn't really about like a company creating the metaverse. It's about like multiple companies joining to create like a shared metaverse. It's like I think maybe it's an optics thing, because imagine like would you really let Facebook control everything when like they can't even control your data? So I'm not sure if like that's the cause for like Libra's like downfall, but I always feel like, especially when you're talking to crypto people, it's really important that there's this sense of decentralization, that there's a lack of manipulation, and the fact that Facebook kind of misused like some of the data and shared some of the personal data means that, can I really trust Facebook with my money, right? So that's kind of like my gut take, but on
So there's
Libra.
Apple or something like that, where there's already a closed,
Yeah. Yeah, it's a closed ecosystem, but I think blockchain by nature should be open, so it should be portable across like different mediums, right? And I think that's kind of like the whole ethos of like Bitcoin and Ethereum, to have like a more like open like system. Yeah.
I've got one from me.
Oh. Yeah.
We were talking about Facebook and Libra.
Yeah.
And don't you, my theory as to why Libra failed was because it looked like it could succeed. Whereas
Interesting.
Bitcoin will have great difficulty because it's viewed as an asset, it's not money. It's definitely it's
Yeah.
money, but it's not currency.
Yeah.
But Libra, which was going to be backed by a basket of fiat currencies, looked like it might succeed. And no sovereign government is going to allow that to happen because they would get disintermediated.
I know, and like I think it's
And money, we all know that money only exists for the purposes of collecting tax. That is an established economic theory. So if you can't collect tax on a cryptocurrency because all of the transactions are obscured,
yes.
then no government is going to allow a tractionable cryptocurrency to get going. They're just
Yeah.
going to kill it. And that's what
Exactly.
they do.
Exactly. It's like even in the Philippines, like Union Bank was actually developing their own cryptocurrency in 2019, their own Philippine-based stablecoin. But then that kind of like didn't sit well with the government. So I feel like there's always government pushback that is like pushing like, and it might be because like, when the power is with them, why would you want to like lose that power? Like, why would you want to like lose that, right? So I think many of like the reasons why a lot of these projects can fail are not for technical reasons. It's mainly because it's threatening the power of the government, So that's a very lot, yeah.
Just on the similar thing, you mentioned utility. Are there any
Yeah.
tokens and coins with utility yet?
A couple. So like there's a project that I saw called Bacon Coin, and it sounds kind of weird, but like they essentially tokenize real estate assets. So instead of like buying a house like outright, like you put money in like this NFT, and then you can like get issued like their stable coin, which basically tracks like the real rental yield. But this market is not yet very, very developed. So there haven't really been any billion-dollar like products or companies that are around this. But I think it's something that's quite interesting and something that a lot of companies are looking at, which is like tokenization in general to make things more efficient. Even like for private markets, that's something that could be quite interesting. If you're doing, for example, private equity and you're like doing like a GP-led secondary, for example, you could use tokenization to like distribute the assets more evenly because you just have a share of like the profits, right? So there's efficiencies to be made, but like I still think there's kind of fear with the technology. But there's definite use cases that are coming out because I see like a couple of projects that are trying to tokenize real life assets and then distribute like the earnings and like the utility tokens or coins or stable coins. Yeah.
Do you remember? And there was Project Stepan.
Yes, Stefan. Yeah.
Yeah.
Yes.
Has very interesting economic
Yes.
model.
That's really interesting. So like Stepan, like it was basically like this project where move to earn. So essentially it's kind of like Axie where you play to earn. Here you would move to earn. So you would like earn like tokens and money by like having the app, right? I think that project didn't kind of collapse as well. Like or did it?
There was a lot of bots. Not
Yes.
real runners.
Yes.
Bots.
Yes, and this is exactly like the issue because even with Axie, when I was looking at it, like there were like bot farms in China that were like clicking the game and auto playing the game, and they had to adjust the game model because of that. So there's always like this kind of like tug of war behind like how do you determine who an actual person is, and maybe like with zero knowledge proof you can do that. Like you can like have like some sort of identity attached to your wallet, and only someone with that identity can play the game, but you don't have to disclose that identity. You just have to prove that you're human. And so that could be like the next application to like remove bots from like the system. Only like real human players could play that. That's still 5 to 10 years away though, but like, that could be a potential solution to the whole step-in and botting problem, which happens a lot. Yeah.
In your role at Vacuumlabs,
Yeah.
we're in a bear market at the minute. Are
Yeah.
you still seeing sort of wide interest from large institutions? Are
To
they
be
still
honest,
desperate?
it's much more difficult now. Like I think people are much more tight with their wallet, like in terms of like doing projects. Although there are some like projects that still have like funding. A lot of the problem I see is that a lot of startups like they don't receive their funding just because you know how the environment is, right? A lot of corporates also have pulled the plug on like blockchain and certain projects. So it's been also like kind of tough on us
Okay.
because there's just been a lot less mainstream adoption because of like how the markets have been moving. But for me, like I'm still a believer in the technology. Like
Yeah.
just wait it out for like 8 to 10 years. I think there's going to be interesting stuff that's happening. You know, yeah. I think that's it. Yeah.
Yeah, that's. Okay, thank you, Eddie, for your presentation.